Let's see. You can hear me. Let's go ahead and give me a thumbs up or a reference if you can hear me okay. Brenda, how you doing, Coach? She says, I'm doing great. Thank you. Helen, Charles, okay. A whole bunch of you jumping in. Okay. Great, great, great. Glad to have you here. We will begin. Let's start the old PowerPoint here. There we go. All right, we want to share. Let's see, this will stop sharing. Yeah, I do want to continue. All right. Okay, so can you all see the front page, the landing page here for the screens? It says Trading Coach Playbook. I want to make sure you're looking at the same thing I'm looking at. Yep. All right, let's go. All right, well, good morning, guys. And as we get started on this, we always want to go through our little disclaimer, because this is just a remembrance, a reminder that we are not going to be doing anything that is related specifically to trading decisions on any trade you're in, or any particular stock or entity or equity, or anything related to specific trades, right? This is all educational. This is intended for those educational purposes only. All right. You do have risk when you trade. You always want to remember that. Managing risk, in my book, is the number one skill. And the reason it's the number one skill, guys, is that whenever you enter the trading world, you're entering a world where you literally have no control over the outcome. You can exit, but you can't control what is happening literally on the field of play. You enter a world and where you have no control over what happens next in the market itself, then you always have an element of risk. You wouldn't do it unless there's also an element of reward. And that risk-reward ratio is the reason that we enter into any kind of a risk scenario in our life, whether it's business, starting a business, entering a relationship. Those are all things where we don't have control over tomorrow. So we have an element of risk reward. And when we compare the reward and the risk together and we come up with the right ratio, then we go ahead and take that calculated risk, knowing full well what the consequences will be if it turns out to not be the outcome that we're hoping. Now, if we properly allow for the different scenarios that can happen, then we can project the consequences of a worst case scenario. And if we can honestly say that if we have a worst case scenario, it will be this, and I'm okay with that, I can live with that, then the risk is a reasonable risk. It's an acceptable risk because it's an affordable risk. You may have a risk that's acceptable in your mind, but in reality, if it happens, you're going to complain like crazy. Well, that's not an acceptable risk. It's a risk. It's a risk-reward ratio. It's one you're saying you're willing to take. But if you are not willing to take that outcome, if it actually happens, then it's not an acceptable risk. All right. So that's just a little side note element of telling you why risk is at the heart. It's at the heart of everything. Everything builds off of that. It's all about risk management when you trade. And it's only because you have no control over the outcome. So there is risk. You can't get away from that. So risk management becomes your ability to survive. You survive first, thrive second. All right, calendar coming up. Always pay attention. Rob does an amazing job of providing you great content and opportunities. My gosh, it's amazing what he does. Yay, Rob. Excuse me. We have this potential opportunity for you. And I say potential, it's only potential because if you don't take advantage of it, you don't get any blessings or benefits from it. So Rob has wonderful content options here for you with regard to option power, option plays. The power of options, of course, is leverage. That's really what it boils down to. All right, guys, today I want to delve into an interesting world that I want to give you some background, what little background that I know about it. And it is minimal. I'm certainly not an expert, but this is something that I have not seen talked about enough, and it is something coming at us at warp speed. So it's something that you need to get a firm grip on, or at least begin to start gaining a grip on this, because it's going to impact your world in ways that you probably will be surprised, be a little mind-blowing when it gets right down to it. I don't know why that did that, but here we go. Bam. All right. AI, artificial intelligence. Hey, what's not to like? Okay. For a lot of the world, their introduction to artificial intelligence on a conscious level is all of the chatter that we hear about GPT, Chat GPT, which has got to be one of the strangest names for a technology that I've ever heard, but it is what it is. Now, artificial intelligence. Guys, I'm old enough to hearken back to 2001: A Space Odyssey. Guys, 2001: A Space Odyssey was not a movie that happened in 2001. Okay, this goes back to my very young ages when I was a very, a young person. And it was a technological leap into the world of possibilities. The idea that you could actually have a robot, a artificial intelligence computer that could run things in space in circumstances where they had to process data wildly beyond our capability to process data, and run space stations and things like that. And so some of you may be even too young to remember all of the buzz and the controversy about this movie when it came out, 2001: A Space Odyssey. The big drama in it was HAL, a computer, and HAL stood for the letters of this computer, and I don't remember what it stood for, but they called it HAL. And the problem was not that HAL was incompetent. HAL was doing an amazing function. He was able to, he or she, but it was referred to as a he, had a male voice, ran things on the space station and performed all kinds of amazing things at the command of those who told HAL what to do. HAL, I need you to do this. HAL, open this door. HAL, do this computation. HAL, yeah, et cetera, et cetera. And HAL dutifully did his duties as this artificial intelligence computer. Now, at the time, there was no computer in existence, only in the concept of people's minds, that could do anything like it was actually doing on this space station. That technology wasn't there yet. The movie was way ahead, which is often the way it goes. Movies are done on things that we imagine, and then we find a few years later that we've actually done that, and it's a big remarkable thing. Well, that's what HAL was. But the problem is that HAL became self-aware, which is the nightmare stuff of terror movies. And when it comes to artificial intelligence, and HAL became self-aware and then began to conduct its own agenda. And when that happened, then it became a threat to humankind. Well, this is the big worry. Now, y'all remember the movie with Will Smith, I, Robot, where you have a robot that is supposedly, just a tool, but somehow, some way, that robot becomes self-aware. That's not necessarily a bad thing, the way the movie was projected, but those who were building the robots were then doing the bad thing, which was projecting their evil intent into the intelligence of the robot. So they became simply tools to act out somebody's devious plan. And so it was an interesting mix of this awareness that became a reality to this one little robot. I forget his name, but this one little robot. And again, the scare was this becoming self-aware. Well, in this case, I believe the plot of the movie was that, sorry, I didn't turn the volume down on that, guys. The plot in the movie was that somebody had put that capability secretly into, or in the past, in the capability of the design of this little robot to become self-aware. But self-aware what? Of feelings that were actually human feelings. In other words, they were programmed and they were hidden in the program of this little guy, this little robot. Anyway, these are things of great speculation. And now we have the reality of artificial intelligence. And some of these worst case fears are being discussed very literally. You have the CEOs of companies developing AI acknowledging, particularly at Google recently, acknowledging that they don't quite understand what's happening, that the AI is starting to take on characteristics and do things that they don't quite understand, and they're not sure that they're fully in control of those things. And so now it becomes this idea that, oh my gosh, all those scenarios, this might actually be happening. And it is a serious concern. You have smart people like Elon Musk, for years, literally several years, has been warning us that this is out of control already, that it is already reached. Recently, he said it's already reached the point where it's too late. It's too late. There is no way that progress, and those who define progress by the ability to utilize certain tools, will be able to keep their hands off of this. There's a combination of the greed of what the advantage might be to them and the fear of, yeah, but somebody else might get it and look what they might do, so we might as well try to get ahead of them. And with that just kind of short-sighted, fear-driven motive or justification, this thing runs headlong over a cliff without the oversight and without the thought process and without the restraints that smart people who were at the cutting edge of this are going, wait, guys, this could be a problem. I mean, seriously, this could be a problem. We have got to have some limits and constraints on this. Otherwise, as Jennifer says, Pandora's box is about to be opened, right? Well, again, some of the top people in the field say it's too late. Pandora's box is open. Now, it has not yet done some of the things that people are afraid of, but what they're saying is you can't stop that now from actually happening, that it's been set in motion, that there's a trajectory that has been defined and it can't be stopped now. We know that artificial intelligence is being pursued by those who we perceive as our enemies, and we know that it can be utilized in a way that could be weaponized. And therefore, if it is an asset or an advantage to someone who is an enemy, it will be. It just will be. There is no such thing as conscience when it comes to it, because as those who have been involved in it have said, it's too late. It's too late to apply conscience to it because it's developed enough to where you can see the potential, and those who will use it and would use it for negative ways, deleterious motives, already are in the process of doing it. So now you get the justification of those who wanted to pursue it anyway as, well, we have to pursue it. And they do it with glee, like some foolish, innocent, well, I wouldn't say innocent, but blinded child. When I say child, simply not mature enough to look through the consequences, but being childlike, looking for an advantage. If I can steal your ice cream cone, I will. I'm not going to think about the conscience of it, or any potential negatives that might come out of it. I'm not going to think through different scenarios. All I'm thinking about is I want that ice cream. And if I can take it from you, I will. And the law of unintended consequences is about to become a reality, folks. So I am a little bit on a soapbox, but because, and this just has to do with trading, we're getting there, because this has been impressed on my mind lately by some of the things I've been reading, that this thing is just flat out scary. And I've been watching and listening to folks like Elon talk for years, but I am blown away about how fast it has suddenly come to pass. And when he says, and others, that it's too late to stop it, I think they're right. And I think that we're going to have to be very careful how we protect ourselves, our families, from negative consequences. And also, and this is where the positive side is, look to the responsible use. You know, what can be done if it's going to be here? How can we use it responsibly? How can we use it as an advantage? But also, you know, with a jaundiced eye, always be looking for the negative, the downside, because it is there. Something this powerful, it has a negative side, and it will be utilized by those who have nefarious motives. It will absolutely be utilized, and we have to be careful. I am one who is a big proponent as a critic of things like TikTok. I really don't care how funny it is, and I've seen some hilarious stuff. It is a platform, that's all it is. But it is a platform that is absolutely feeding information back to the CCP because of the connections of how it is built, how it is owned, how it's reported. It's an established fact, and I'll argue anybody on that, that those proponents of it are just trying to sugarcoat and hide it, you know, push things under the rug. It is a potentially serious breach of security, of privacy, and it is putting powerfully private information in the hands of those who would use it in a negative way against us. It is using a lot of artificial intelligence. And the Chat GPT, I don't trust it as far as I could throw it. Really, I don't. I know it's being integrated into everything, and there's no way you're going to be able to avoid it, but doesn't mean I trust it. Doesn't mean that I'm not going to be real careful about how it influences and impacts my life. And I hope I just hope you're careful. I want to go through a few slides real quick. Helen, I'm with you. Brenda says, where'd your face go, Coach? Well, I just pushed it off. I didn't think you need to be distracted by my face. I wanted you to see what's going on the screen. So there you go, Brenda. I'm still here. Rocking my Punta Cana t-shirt. What a lovely place that was to visit a few months ago, last winter. It was awesome. All right. Meet Composer. Guys, there are now sites that you can go to where you can build your own HAL. You can build your own AI. You know, if you're inclined to do that, you can build and backtest any kind of programs. No coding skill required. It's an interesting concept. You know, you just go and say, I want to do this and this and this and this, and then I want to compare it to that and da 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 da. And you just think through a logic process, and you can use this site to build your own AI. It's kind of interesting. Right here, this is an online, because we're going to be talking today about the impact of AI on online trading, or trading in general, but online trading in particular. This is interesting. Online brokerage firm, there's what they can do. A robo-advisor, there's what it can do. Traditional advisor, this is what they can do. And then Magnify, which is a new service, is saying we can do all of it. And it's all AI driven. And because of that, we can do everything that an online, a robo, or a traditional advisor can do all in one. Okay. You've got artificial intelligence for trading. This says complete the real world projects designed by industry experts covering topics. So what this is literally a degree program. You can go and get a degree through this company of how to design algorithms for artificial trading. Okay. You get a degree in it. It's fascinating when you start looking at what's out there now. The 10 best AI stock trading bots, okay, not the stock trading not you can also look up the 10 best AI companies to trade. And for a price and a long sales pitch, somebody will tell you what they think the 10 or the 3 or the best 5 or whatever it is. But these are trading bots, which are growing like crazy. You got onto the video world, and you got ChatGPT made me $100,000 in a trading strategy, you know, and yada, yada, yada. Build an AI trading bot without coding. It's going to become prolific, to say the least. Stock picking program, AI stock picking program. Now, this one I only put up because it's fascinating. Look up here where it says, this is the Mark Chaikin report. Mark Chaikin is not AI. Okay, Mark Chaikin is as old school as it gets. He's phenomenal, but he uses his own proprietary mechanical trading processes for picking stocks, and has been doing it forever. I mean, Chaikin is well respected. He has some technical indicators, and yet he's in on this, you know, AI stock picking system. Well, when you dig into it, it's really not AI. It's his old system, but he's using some algorithms to do some analysis on it. Therefore, now it becomes part of the AI. Why? Because it's a buzzword. It's selling. It's a hot new thing. AI-powered robotics. You know, this is, now here's where we transition a little bit, because AI is going to be utilized virtually everywhere. This is like, you know, discovering the microwave or discovering electricity. The application can be utilized everywhere. The potential problems is that with its self-learning capabilities and the magnitude of data that can be processed, everything winds up being integrated. And when everything is integrated, you know, you can start doing some crazy things where you start invading systems and interlinking and influencing and cyber attacks. It's nefarious because of its power, and the fact that it can be utilized for good or bad equally. And the sad thing is that anything that is developed as a technology that can be used for good things can also be used by those who want to use it to take advantage. And therefore, you know, you always have this yin-yang application of things. But this is a segue, what I wanted to do into, from a trading standpoint, AI-powered robotics to solve the global food crisis. All right, well, that's cool. NextGen is a company. NextGen Food Robots has placed itself at the center of the AI revolution with the most significant megatrend of the century. It is utilizing the most advanced AI technology to solve the global food crisis in its 20,000 square foot facility that houses some of the most sophisticated AI robots in existence. NextGen Food Robotics, AI-powered super app codenamed Lily, could revolutionize the way people order food and grocery shop. Lily uses natural language processing to create human-like conversational dialogue along with the app to learn user behaviors. Lily is being built with its own AI language processor and will not be required to link into ChatGPT for natural language implementation or data points. This idea that AI can be used to attack world problems like food crisis, energy, you name it, it just opens up amazing possibilities. And now what it does is it opens up a frontier of companies that will be pioneering ways to do this, whether it's into food or energy or technology of every sort, or even non-technological applications. There is opportunity for it's called a step up or a wave up. So when you have a technology that is a revolutionary technology, it works its way into a system, into a network, if you will, with first adopters, early adopters, then the follow through, and then eventually, little by little, the entire industry. So you're going to have this go to the easy low-hanging fruit first, the easy applications of AI. But as it develops, you'll have more and more people thinking, well, hey, shoot, we could do this, or we could do this with it, or what, you know what, I never thought about it. We could, and it just goes on, and it eventually just goes and goes. So there will be opportunities for all kinds of companies and entrepreneurs to utilize this to make changes, wave changes, sea changes, if you will. And those are going to be very powerful and significant, and they will create opportunities to trade. Now, as traders, all we need is an opportunity. If we have a set of rules, if we have a process that we utilize to trade, we just need something to trade. Well, this will produce some high volatility, some potentially quick moving opportunities to trade in many different industries. So essentially, AI can just provide another wave of opportunity for traders, but it also has an application in trading. Okay, so now I'm going to just try to do, good job, Brenda. What I want to do is ask you, have any of you picked up any favorite AI stocks so far? Companies that you like, or you have looked into, or that you think have some great potential to be benefited by this growth in AI? That's a question. So if you have any ideas or anything that you've run into that you think are connected with AI, go ahead and put them out there. I have not done very much in this area at all. I'm actually curious to see if any of you have started to pick up and follow this, but I have seen this cycle before, and it's something that I am going to put some effort into, because there will be some amazing opportunities, and they will come from existing companies. There is a mantra in the market, an adage that says first one in wins. When it comes to technology, that's a concept that it's kind of has a lot of history to it and a lot of efficacy. First one in wins. Why is Intel still the major player in chip manufacturing? Because they were the first ones in. Okay, first ones in, if they play their cards right, have the ability to stay on top, to stay ahead of the curve. But you also have many, many followers that will come in that will become the next big thing, you know, the next Amazon, the next Microsoft. Let's see. I'm going to go back over here. Hey, Bonnie, how you doing, kiddo? So let's look up here. Somebody says, here we go. All right, here's the list is starting to build. NVIDIA, I agree with that completely. AMD. So NVIDIA, Trip says NVIDIA and AMD both have chips dedicated to AI processing. Exactly. NVIDIA being the top on my list in terms of existing companies. So as far as existing companies that are driving and pushing the AI, there is right up there is NVIDIA in my book. They're right up there close to the top. AMD, exactly. Google obviously has been pushing this for a long time. It was a Google exec that admitted that that's kind of out of control, and we don't know why it's doing some of the things it's doing, and we can't tell you, explain some of the things that it's doing, hinting that it's getting a little out of control. Helen says AI is Tesla's biggest asset. Well, true, Tesla is involved in it, and Elon Musk is involved with it, but keep in mind that Elon Musk was the early whistleblower saying this thing is genie out of the bottle, and it's got to be controlled. But there is a lot of companies, guys, a lot of company. Bonnie says tickers AIQ and AI both down today. Well, things having to do with this are going to come out of left field. You're going to get little companies that have been working on stuff that'll make a breakthrough in an industry, and you'll have an AI step up in an industry that will be groundbreaking for that industry. Well, yeah, you may not be interested in that industry, but you may be interested in a stock that goes up 1,000% in 2 or 3 months. Those kind of things will happen as this rolls forward. And guys, it's because it's a sea change technology. It's a step up, and it's a wave technology, which means it rolls through the pond. You know, the wave starts when you throw the pebble in. It starts in the middle and it works its way out and eventually goes all the way to every part of the shore of the pond. But it starts in the middle, and we've seen the pebble hit, and the wave is starting to roll, starting to move out, and it will create many, many opportunities. I'm just convinced of it. Okay. All right, so let's shift, and I want to go over to the charts today. So I'm going to shift out of the screen sharing, and we will go, give me just a second to, let's see. Oh yeah, I think I want to put this over on a different screen. Here we go. All right. Let me know when the charts show up, guys. The chart show up on your screen there, folks. Oops, did not mean to do that. No. Well, let's figure this out. You are screen sharing. All right. So what are you seeing if you're not seeing the? Okay. All right. There we go. Finally. All right. Okay. So here is one example of a AI stock. It's iDrive. This has to do with self-driving electric vehicles. And you can see that a year and a half ago, 2.5 years ago, November 2021, this was up here. It jumped up to $58. If we look at the history on this, we go back to 2020, March of 2020, we were down at $18, and it goes from 18 all the way up to 56. Okay, so that's a triple. It's a 300% run. And you'll notice here some significant things, several, but I'll point out just a couple of them. One is this concentration of pricing. Now, I'm making that point for two reasons. I'm going to draw two rectangles here, draw another one. All right. And we'll do a third one here. Oh, come on, do what you're supposed to do. Darn it. Click. There we go. Oh man, for some reason it's a little sensitive on the big screen. So let's take it out here. All right, there's our upper range limit is 56, and we're going to take this trading range down. There we go. All right. Hold still. There you go, right there. All right. Out of the past, these are the significant upside targets that you need to pay attention to. The significant downside targets would be Let's see. I can get this thing to. Okay. So looking at the past, I've told you before many, many times, past is prologue. We look at this climb out that did a 300% run. We had a major concentration of price here right at the end of 2020. And then we shoot up here in the beginning of 21, and we get stuck in this trading range here for 1, 2, 3, 4 months. Then we pop up and we do it again, 1, 2, 3, 4 months. Then we pop up one more lift, and that's where it tops out. You get a big topping pattern, back down into this range, back down and then through, and then we come all the way in the end of 2022. Okay, not quite a year ago, but about 8 months ago, 10 months, 9 months ago. And we drop down into this trading range, at which point we are trying to climb back out and establishing now an upward trend. But this upward trend has some constraints. Okay, it has some parameters to it. Now, we looked at this, we tried this a month ago. And what I want to do is click on that thing and extend it a little bit. And we're going to extend it to the right. There we go. So that gives us a projection on the future, on the upside influence of this trend on the support side of it. We see we have one big rotation, we have two big rotations, we have a third rotation, we're starting up on a fourth one. Given that patterns go 3 to 5 times, the pattern does suggest that the target up here is about $43. Okay, but we're in rotation number 4. And we've pulled back at a higher high from the last rotation, but a lower high on the bigger picture. So whenever I get to something that is in a 4 rotation, I get really dubious about projections, because 3 to 5 is where they tend to break down. So we're right in the middle of that. What could happen to this AI stock iDrive? Well, we could see this move on down and test the support level again. We could see it move on down and drop into this yellow zone, which is a trading range where there's lots of support. From the top to the bottom, 1, 2, 3, 4 times, you've got major rally points established inside of that rectangle. But you could also see it recover, and you could see it move on up. Now, we've got an interesting scenario going on here that you don't see too often, and that is we see a double gap. Okay, and you don't see this too often, where you gap up and then you turn around and you gap back down and you leave some untraded space. Okay, a gap is in and of itself an anomaly, and that untraded space tends to warrant going back and retrading over it. Now, when do gaps become insignificant? Does anybody know the answer to that question, Trip? I would think you and some of the guys might have the answer to this, but when does a gap become insignificant? I'm saying that Yahoo, Barry, iDrive, yes, I'm phonetically reading the company. IDRIV is their ticker symbol. Okay, it may not be the same as the iDrive company you're talking about, that you're looking up, that you're saying that Google says is a private company. They might be a private company, but you've got somebody out there who has picked up the moniker of IDRIV. Well, it's a iShares. It's an iShares derivative. Okay, it's kind of like an ETF, and they have picked up the IDRV as the ticker symbol, which anybody is free to pick any ticker symbol they want. If it's not being used, you can choose it and register it. So it may not be the iDrive company that you looked up on Yahoo. Okay. Tripp says, when it stays open too long, or if it happens very infrequently. Okay, I'll accept that answer because you're right, but I'm looking for something else. Okay, when I say something else, I'm saying something more. I don't like it when somebody says, they ask a question, you give them the answer, and they say, well, that's nice, but that's not what I'm looking for. If that's the case, then it throws back to the person who asked the question and say, you didn't ask the question very good. And there's fair truth to that. So let me try to ask the question better. At what point or what circumstances exist where gaps become irrelevant? It's to a particular stock. Okay. And that is if there is no pattern on how the gaps resolve. In other words, if a company has a history of doing gaps, but there's no pattern that you can identify what to do with, it's insignificant. The company gaps, say, okay, so what? Company gaps all the time. And there's no rhyme or reason. That doesn't follow any pattern. Well, then it's insignificant. It's irrelevant. All right. A company may gap all the time, but it has the same resolution. Well, that's relevant. That's very relevant. So does this iShares trade gaps a lot? And the answer is all the time. All the time. So when I look at this, this is an interesting gap pattern, but is it significant to this stock? And the answer is, I don't know. Well, yeah, but and you can give it a name if you want. There are names for different gap patterns. And I go, yeah, okay, that's cool. You found one, but does it mean anything? Well, yeah, it's no. On this stock, on iShares, does it mean anything when it does that? And you don't know that answer. You could find out, but you don't know that answer. Why? Because you haven't looked. You have to look back over the history of this company and say, what does it mean when this company gaps, especially if it does a gap where it leaves an island? What if it's an abandoned island type of a gap? Well, there's one right here. And there's another one. Where is it? I saw another one. There's gaps all over the place in this stock. And that's the second time I've seen that happen on a major basis. What happened? Well, the last time, it topped out, when it gapped back down, it went running for cover. Okay. So is this gap going to recover and rally back up to the upside, or is it going to run for cover? Well, based on the only other time that I can see in recent history, it may run for cover. Okay. And that could be anywhere down at 37, all the way down to 37 or 37 and a half down to 37. We don't know. But a gap is only significant. Well, I have a friend who has a great saying. I don't know where he got it from, but I love it. And he says, nothing is good or bad except by comparison. Nothing is good or bad except by comparison. So is that gap significant? I don't know. Well, I saw that. I read about it. Okay, that's cool. But does it apply to this stock? And the answer is, I don't know. I have to look. There's another one on the downside. It's not quite complete, but it's real close. Same concept. The tails overlap, but it's still a body gap with an island. So you look at it and you say, well, I have to look back, and I guess, it's a significant kind of pattern, but the only thing I've got to go on is this right here, where it dipped down and then it changed directions here. So it could rally up, so do I have anything significant about this gap? Well, probably not. Probably not. The assumption on gaps is that when you have a gap, it leaves a target to be overtraded, that the company will come back, the traders will come back and they'll recover that gap. Well, the answer is not necessarily. There's an example. There's another example. There's another example where they didn't. So if a company gaps all the time, the significance of the gap becomes diluted, and it becomes insignificant if it gaps all the time and there's no pattern. Okay, so what Tripp said was exactly right. I added one more piece to it, which is that if there's no history, of how to interpret that gap with the stock, then it doesn't matter what you read in some article somewhere. It doesn't mean anything to the traders of that stock. If whatever was in that article you read does not show up in that stock trading over the last year, it doesn't matter to that stock. I don't care who wrote the freaking article. I don't care if they're a guest host on CNBC. They're full of crap if they think that their definition of what that gap means applies to every stock, if you can see right now on the one you're looking at that it doesn't. The only thing that counts is reality. Not theoretical application. It's, yeah, but does it work on that stock? Well, what do you mean? It works. It's called a da-da-da-da-da. I read about it in books. Okay, good for you. That's really nice. But does it mean anything to that stock? Well, and the answer is you don't know. Now go apply it. Look at it. And if you can't find it, if the pattern's not there, it's not there. If there's no pattern, there's no trade. You've heard me say that many, many times. If there's no pattern, there's no trade. Okay? If you can't see a correlation of whatever that is supposed to mean when it comes to gap trading, if there's no correlation in the stock and the people that trade that stock, then there's no correlation. I don't care who wrote it, said it. All right? It's just the way it is. All right, let's go back here to, there was a couple of comments. Let's see. Bonnie says, Ryan, at this point, AI technology, would you be interested in trading options or buying shares for a retirement account? Both. Both. Bonnie, it just depends on where you're at in life. Okay. If this is a wave change technology, then it would be nice to own a piece of it. But as fast as things will change, the long term is probably the companies that are in it right now that have got the catbird seat. Companies like Google and NVIDIA, for example, maybe AMD. There's quite a few of them. Tesla, even Apple. You know, some of the big techs that are jumping in with both feet into the AI sector are going to be the ones who kind of drive the agenda, but the upstarts will be plentiful. Those are the ones that are better trading opportunities, unless you've got inside information. And I say that in tongue in cheek. It doesn't have to be inside information if you know somebody that is aware of a company that has a particular type of technology and they're really bullish about it. Okay, they really think that it's going to be awesome and you like the story. And so you decide because your friend turned you on to it that you're going to buy some. That's not insider trading by any stretch. It just isn't. Okay, nothing wrong with that. And if you wanted to take especially if it's something you can get cheap, right? Because they're a startup, they're just getting going, and you want to jump in on that and maybe be an early adopter or early investor in that particular stock, why not? Nothing wrong with that. It does not have to be something that you consider a long-term trade just because it's a a big major company. It could be a startup. It could be a very speculative play. If it's cheap, you can take a position in stock as opposed to options or long-term options. You can go either way on it, right? That's my advice on that. Okay. All right. Let's take NVIDIA and take a look at it. Hang on a second. Okay. So let's take NVIDIA here and let's do a little bit of long-term projection on it. All right, we had a major gap here. Last earnings jump, riding the wave. I'm going to push this back a little farther. Okay. And shoot, let's do this. This will be kind of interesting. I'm going to a monthly chart on NVIDIA. All right. Okay. Major player. And from a chip standpoint, cutting edge, firmly ensconced in the technology wave department, i.e. everybody who develops new technology is going to go to somebody like NVIDIA to build the chip that they want. Okay, now adding being on the forefront in the AI space. Let's do a weekly chart here. That's not going to show the gap, obviously, on this last go around, but it is going to give us a perspective. So how big is the run up in NVIDIA? Not the gap up, but the run up so far. So we go from 113 up to 450. So we have a 400% run in less than a year. Okay, so NVIDIA, 400% run in less than a year. If we go back and we identify this price concentration in 2021, wow, I'm just getting a really delayed response. Okay. My keystrokes are outpacing its ability to respond here, and I'm shooting myself in the foot. Must have some static or trouble here with my internet connection, because it is just being incredibly slow responding, and it drives me nuts when this happens. Gosh, I pay plenty for my internet service. Hate it when it gets clunky and slow like this. Okay, so back in 2020, we started a compression pattern that went for about 6 months, almost 6 months, tight compression. Then we had a nice breakout, and once we break out, we go from the 118 range up here to 322, and we pull all the way back down to 118 again, which is 100% pullback off of the run. So we give back 100%, this over the course of just about exactly a year. And then we take off last October, and it starts climbing out. And the climb out was against this backdrop right here. Okay. We grab our parallel line. And we have 1, 2, 3 rotations and breakout after the third one. Okay. The breakout happening at about 145, literally coming off the 118 as we mentioned, but the breakout above 145 then moves on up. We have a gap, and I'm going to compress this down with the lines that we just drew. So now you're back into a daily chart. There we go. There's our trading range. There's the breakout. There's your 1, 2, 3 rotation on the pattern. Now we're rolling up with 1. We have, well, it's not much of a pullback, is there? On this run up, we have 1, 2, 3, 4, and then we have the gap, but that's really kind of straining. This is literally a vertical move. So I look at this and I say, how do gaps play with NVIDIA? And I see definite gap filling here, gap filling there, gap filling, gap filling, gap filling. Okay, I'm seeing significant gaps get filled with NVIDIA. Therefore, I would expect that from a historical standpoint, we would expect that we would see this gap fill at some point. So if there's any pullback, and guys, with a push this hard with a 400-point run or a 400% jump, essentially, there should be an opportunity for some backfilling here. Okay, there should be some backfilling, which would fill that gap. The things that we would watch very carefully on NVIDIA is going to be this, which is the opening of the gap. You're going to have this price floor. And these right here are about 15 points apart, 10 to 15 points apart. Okay, so pullbacks on a bullish run, we were looking for higher highs, or higher lows rather, higher lows. So on a pullback here, if it pulls back and it does not get all the way down here to 130 or 175, 170-ish, 180-ish in this range, if it holds up higher, then it's still a bullish push, a real bullish push. If it comes back into here, then it becomes interesting, because now we got a range of about 12 points down to the opening of that gap. You cross this line right here in that gap, you're going to have two major targets, or at least your targets are going to be defined by two significant points. Okay. Oh, come on. You're going to recognize it. I'm clicking on the stinking rectangle. Just draw. There you go. Right there. That's what you would look for on the downside. That's a landing zone. Okay, why? Well, because that's our gap. Now, I take back what I just said because I didn't define it. There you go. Come back. I hate delayed keystrokes. Did not ask for that. Wow, just trying my patience. There we go. All right. Get rid of this thing. I am not a patient person when it comes to this kind of stuff. Boom. Okay, there you go. So that is your range right there. It's 349 down to about 320, 319. Okay, so you got a 20-point window that is the strongest attraction to any downside retracement or pullback. There is a tendency for an NVIDIA to fill gaps. It would fill the gap at 350, 349 and a half or so. It would make sense to drop down and test, if you're going that far, all the way down to the 320 area. Yeah, we'll see. But that 349-ish would fill the gap. Dropping down below this line right here, which is 366, would be the sign that you're probably going to cross that line. So that's 25, 26-point move. Is that right? Am I doing my math right? No. It's 17 points. So that's about a 17-point gap right there. And that would be a fun play on NVIDIA as far as setting targets, because this thing follows patterns. If it comes back down across that line, the odds are really strong it comes back at least this far. Fill that gap. And at that point, if it's still bullish, that could be the rally point. Anywhere in the yellow could be the next upside rally. Right now, it's on a tear to the upside, so pullbacks tend to be breathers. Sometimes the breather is I'm completely out of breath. I've got to go back and check in, go back to the barn. And if that's the case, then we come all the way back down. Might as well fill the gap while we're here and then get ready for the next up leg. Okay. No reason to anticipate right now that NVIDIA needs to take a big haircut, a significant haircut and lose 200 points. Just isn't there. The earnings response shows you that the interest is willing to put it, the interest in the market is willing to put it into places where it's never been before, all-time highs. So there you go. But it does have to breathe, and it does have a history of filling gaps. So there's a potential play on NVIDIA based on history, based on the fact that it tends to fill gaps and that it's had a huge run without taking a significant break. That's how you target. Now, could this be programmed? Of course it could. Guys, I'm going to end with this. When I very first got started in trading, black boxes were already being built. Black boxes is a process of building an algorithm, a computer-generated trading process, trading program. Guys, we have not yet seen what AI can do to trading. I'm anticipating there could be a potential sea change with the ability to program the things that we try to teach you as humans to do, which is to manage your emotions, to set up rules, to have a trading plan that is thought out, that has great risk management. The only variable in any trading plan is you. You are the variable. Okay? You are the variable. And if humans are the variable, humans are also the creators. Okay? The computer and the AI has yet to become self-aware. Okay, well, there's scary things potentially coming down. We'll see what that develops. But trading programs that trade for you, black boxes, have always had the problem that they're designed by humans who are making assumptions. But to the degree that it can help you manage your ability to follow a trading plan, I think there's some real merit there. If you can get something that will help you take all the good things that you know that you need to do and plug those into a if-then scenario. If this happens, you do that. If that happens, you do this. Contingency trading, which is something that I am proud to have been on the cutting edge of developing. Okay, I say that humbly, but I literally did have an influence in contingency orders coming into existence. And it's taken a long time. And I see potential of AI in helping develop programs that will help you institutionalize those good things that you think about when you're rational and sensible and sober of this is what I should do. If this happens, I do this. If that happens, I do that. If that happens and this happens, then I can do that. That can all be programmed now quite easily compared to what it used to be. And with the ability of AI to help you follow the rules, I'd say, there's the upside of it. Is there a downside? It's chilling. It's bone chilling. But as with most things, if you find the good, take advantage of the good. Find some good in everything and stick with it. But just be real careful about being sucked into things that might otherwise, hit you blindsided. You don't want to be blindsided, guys. Just acknowledge the fact there's a downside, watch for it, be careful with it, and then take advantage of the good side. All right, Jennifer says, yes, only as good as the logic, right? It takes time to test. Correct. Charles says it's a great class. Well, thank you, guys. I was really kind of iffy about this class. I didn't know how it was going to go over, but I hope you got something out of it. Take care. God bless. Have a great weekend. We'll see you next month. Bye now.